Welcome to this week's Crypto Buzz by Kalkine TV. My name's Sage, and the global crypto sector has taken a proverbial sigh of relief with big news for crypto as the market cap has officially regained the $1 trillion level in global market cap. And earlier this month, in June as well, large Bitcoin miners, Core Scientific and Bitfarms had reported selling masses of the crypto, with Core Scientific being prominent, with a reported market cap of $525.52 million. The third largest publicly traded miner by market cap globally, having announced the sale of 78.6% of its Bitcoin holdings. Bitfarms as well also reported to sell off close to $62 million of its Bitcoin in June. It's been interesting to note that during this downturn, Bitcoin mining's hash rate has remained comparatively high, and mining hash rate sometimes correlates with the price action of Bitcoin, with a high hash rate increasing the price of Bitcoin. Bitcoin's mining hash rate has been sitting around only 5% below its all-time high during the slump, and the reason for this could be pointed to the diminishing growth of Bitcoin's relative growth of hash rate and how it is correlated to the absolute growth of the total crypto sector, which has increased significantly through more institutional investment. Hive Blockchain is a good example. A Canadian miner with a strong ecosystem are also up today 4.35%, with its share price having moved up 20.86% over the last 7 days. Although trading volume is still below its average, it is gaining positive sentiment from the investors for future growth. Its share price was up close to 11% on Monday, 18th of July, and the company is committed to a strong ESG strategy using 100% renewable energy for its mining operations of Bitcoin and Ethereum in Canada, Sweden and Iceland. Iceland's actually where it all began for the company back in May of 2017, when it acquired a mining data centre and commenced trading publicly on the Toronto Stock Exchange. The price of Bitcoin has been stuck in a range, you may have noticed, somewhere between $19,000 and $21,000 over the last month. However, it witnessed somewhat of a breakout from that sideways price action, with a surge up this morning of close to 5%, pushing the price to about just under $23,000 US. In fact, it was close to $22,800 before it moved back down to just under $22,000 US. And this is data that was current during the Asian mid-session, Bitcoin being priced at $22,200 according to data from CoinMarketCap. The largest crypto by market cap has moved up about 11% over the last 7 days. Ethereum has clearly maintained its upward trend that it's been developing over the last week, with a close to 40% increase in its share price, according to data from CoinMarketCap. And the price of Ethereum is up about 9%, reaching $1,539 US. Some of the reasons for this rally could be reporting season for companies like Goldman Sachs proving better than expected, and the upcoming final merge of Ethereum's new mainnet that is on the more environmentally friendly mining consensus known as proof of stake instead of proof of work. It was reported by Weiss Crypto. Now, the move over to proof of stake mining will actually mean that a large amount of staked Ethereum, which was required to previously mine Ethereum on proof of stake, will be freed up. So it'll be interesting to see the liquidity and the price action that will bring. Now, these surges in price for Bitcoin and Ethereum haven't been profitable for all, however, as millions of short orders were liquidated in the last 24 hours. But as the tussle between the bulls and the bears continue, we'll have to wait and see if this is classic head fake territory, with the investors taking their profits, which could push the price down. And according to FX Street analysts, the investors who bought the dip last week and risked catching dropping knives actually made gains in the current move upwards. However, whether the support level has been identified yet for Ethereum and Bitcoin is still open to contention, with Grayscale Investments' most recent report showing that if the analysis is correct, the current bear market, according to them, could continue for another 250 days based on stochastics of previous market cycles and the repayment of losses from Mt. Gox, which could be happening as soon as August this year. This bear cycle has tested the DeFi players, with many having filed for bankruptcy due to the astronomical 20-to-1 leveraged lending that has not worked well for the likes of 3 Arrows Capital, Voyager Digital or Celsius. DeFi on the whole, however, has shown that there is something there other than a house of cards cash machine, with its transactions recorded on the blockchain transparently. DeFi can be seen as the backbone of almost the entire industry, with incentivization to liquidity providers, protocols that prevent slippage and front running. On a general basis, Aave, Compound and MakerDAO have all managed to remain somewhat buoyant, with their DAOs and governance protocols enabling a fairer and more equitable decision-making process. MakerDAO's Maker token is up about 4% in the last 24 hours, and over the last 7 days it's up 17%, and over the last 30 days it is up 38% according to data from CoinGecko. Compound, another DeFi protocol with its token Comp, is up 95% over the last 30 days, and over the last 7 days it's been up 15%, and in the last 24 hours it's been down about 2%. Aave's token, Aave, AAVE, is up 2% over the last 24 hours, and over the last 7 days it's up about 48%, and over the last 30 days it is up 89%. So although many people have been gloating in the recent crypto market slump, with many criticisms on the sector's high energy consumption being exacerbated, the traditional banking system was not cleansed of its evils either after the GFC in 2008/9. The crash, led by Lehman Brothers and lenders Freddie Mac and Fannie Mae, you may remember, had people still trying to decide whether banking is evil or if crypto is more evil. Is crypto just a glorified casino? It does pay to do your research into the benefits of tokenization and the advantages that blockchain technology can offer before you make your final decision. The user experience for some crypto protocols can still be clunky, but its potential to bring more efficiency and liquidity to financial mechanisms, such as overseas transfers, as well as new funding models in the emergence of Web 3.0, is worth the look. In Australia, we've seen neobanks like Volt recently, who do operate in the traditional financial sector, also collapse. Banking fees, for example, are costing consumers almost the same amount of money as the GDP of 84 nations combined. And this is close to $6.6 billion. This, according to the United Nations Food Assistance Branch, is the same amount of money that could rid the world of 42 million starving people in about 43 countries. This was reported by Pantera Capital. So DeFi smart contracts have each transaction coded into the blockchain, which is immutable in nature and which creates a trustless economy with benefits and rewards for loyalty and participation. So I'll leave it up to you to decide whether DeFi is just a glorified casino or not, and how it rates compared to the traditional financial system that we are currently working in, that perhaps could do with a bit of a facelift or a rejig. Do comment below and let us know your thoughts. Thanks for joining us on this episode of Crypto Buzz. As always, anything reported in this episode is for informational purposes only, is not financial advice in any way, so please do tread carefully when investing in digital assets. It's basically food for thought, and the market is highly volatile, so do your homework. Keep watching Kalkine Media for more live expert talks and market insights. Until the next episode, may the hodling continue. Sage here signing off.